financial forecasting. Now, I'm sure you can very easily understand if we have to do valuation of a company, it means what? It means we need to find the value of that company. So, what is the value of a company? The value of a company, there are different approaches. So you got market approach, you got asset approach, you got income approach, and under these different approaches you have different methods. So under asset approach there are different methods, under market approach there are different methods, and under income approach also there are two different methods. So whenever you need to use the income approach, and please remember, all said and done, income approach is the most fundamental approach for finding the value of a business. And why it is most fundamental in my view? It's because ultimately value of a business is what? Value of a business is nothing but its ability to generate revenue, its ability to generate cash, its ability to generate income. Just one second. So and therefore please remember, DCF method is one of the most frequently used method for doing the valuation across the globe. पूरी दुनिया में discounted cash flow method is one method which is used for the purpose of valuation, and that is why we need to focus on discounted cash flow method. Obviously अगर आपको discounted cash flow method मालूम करना है तो how will you find out the discounted cash flow? For you to find out discounted cash flow, you will need to find out first as to what is the cash. And if you have to find out how much is the cash generated by the business, you will need to find out how much is the profit. And if you have to find out how much is the profit, you will need to find out how much is the income and how much are the expenses. And therefore, friends, please remember, financial forecasting is a very critical activity as far as valuations are concerned. No matter what valuation you are doing, invariably you will realize that DCF is what you use more often, and therefore you should know how to do the financial forecasting. अब इसमें interesting बात यह है कि financial forecasting is not something which is new to all of us. Financial forecasting is something that all of us have been doing ever since we joined the corporate world as an accountant, cost accountant, or chartered accountant, or as a finance professional. So that is what we've been doing from the very beginning. The same thing is used, the same approach, the same methodology, the same sequence is used for the purpose of valuation also. So if we have to do the financial forecasting of any business for which we have to do the valuation, the first step that we need to do is compile the project cost. So the first thing, and I'm assuming that we are doing valuation for a company which is just starting the business for the first time, and therefore you will need to know as to how much is the project cost. So if you have to know as to what is the project cost, you will need to know as to what are the different components of the project cost. लैंड कितने का है, बिल्डिंग कितने का होगा, प्लांट एंड मशीनरी कितने का होगा, बाकी की जो एसेट्स है वो कितने की होंगी, मार्जिन मनी फॉर वर्किंग कैपिटल कितना होगा, कॉन्टिजेंसी के लिए कितना प्रोविजन करना पड़ेगा, प्री ऑपरेटिव एक्सपेंसेस कितने होंगे. सो ऑल दैट विल नीड टू बी कंपाइल्ड एज द स्टेटमेंट नंबर 1, which is the project cost. Having done that, now what you need to do, you need to compile a realistic set of assumptions. So and remember, this is what you will have to do in real life also. So tomorrow when you will be working on a valuation assignment for any client, Ideally, you will ask the client to give you the financial projections because the client understands his business better than what you and I would. So ideally, you would ask the client to give you the financial projections. But in certain cases, the client may ask for your professional help for doing the financial projection. So in that case, you will need to prepare a statement of assumption. And what this statement of assumption will include. So it will include all the information. So what is the installed capacity and what is the planned utilization? Or what is the demand for that product locally and globally? What is the order book position of the company? What is the average selling price? What is the price mix, product mix, market mix for the products of the company? Now this is all that you will need to know in advance as part of your statement of assumptions. Domestic sales kitna hoga, export sales kitna hoga, and what are the assumptions about the material consumption, procurement price, yield and wastages. All these assumptions will need to be ready with you for making the financial projections. And then of course, you will also need to estimate the other expenses. So what is going to be your total COGS, cost of goods produced kitni hogi? What are going to be the different components of your SG&A, selling, general and administrative expenses के different components कितने होंगे? And how much is going to be cost under selling expenses क्या क्या होंगे? General administration expenses क्या क्या होंगे? वो सारे आपको लिस्ट आउट करने पड़ेंगे और उनके assumptions in consultation with the client you will have to prepare for the purpose of making the financial projections. उसके बाद में you will need to do the revenue estimation. And remember, invariably, when you're doing valuation, so you will need to do the financial forecasting not for 1 year. You may have to do it for 5 years, 7 years, 10 years, 20 years, depending on the type of the product that you are going to do the valuation of. So पूरा जो भी आपका duration है जिसके लिए आपको projections करने हैं, for the entire duration you will need to estimate the revenue for the year as well as for the period. Likewise, you will need to estimate the expenses for the entire period. 10 साल का projections करना है, so 10 साल में कितने खर्चे होंगे under different heads, that is what you will need to project. So basically, जो आपके P&L में जो आता है, वो सारे के सारे item you will need to project. So really speaking, what you are doing is in projections you are making a projected profitability statement. So projected profitability statement virtually will have all those items that you will have as part of your regular profitability statement. And then you will need to do the depreciation, computation of depreciation. So before you do the depreciation computation under the Companies Act and under the Income Tax Act, you will also need to do the capitalization of the pre-operative expenses in case it is a new project. If it is an existing project, then you do not have to worry about existing company, operating company, running company. In that case, you do not have to worry about capitalization of the pre-operative expenses because that would have happened already in the past. But depending on the situation, you will then compute depreciation. So you will need to compute depreciation under the Companies Act and also under the Income Tax Act because the depreciation under the Companies Act is on a different basis and depreciation under the income tax is on different basis. So not only the bases are different, but the purposes are also different. The purpose of depreciation under the Companies Act is to help you spread the cost of the asset evenly over life of the machine, life of the asset. The purpose of depreciation under the Income Tax Act is to give you kind of an incentive, tax incentive, to be able to pay lower tax during the initial years and thereby have more cash since you are spending money on the capex. So that is what you will need to do. So once you have done the depreciation computation, now the next thing is estimation of working capital requirement. And please remember, working capital requirement is important from 2 points of view. Number one, it blocks your capital. So you will need to have inventory, you will need to have receivables, you will need to have cash and bank balance, and whatever is the quantum of inventory or receivable or cash and bank balance, so much of your money is locked up in the working capital. So you will need to do the provisioning. So as part of your project cost, you will need to estimate as to how much money you will need to block in your working capital. So that is what you would need to find out, and based on that you would be able to find out what is going to be your bank finance requirement. That means how much you would be able to fund from your margin money and or from your own sources, and how much of this will be funded by the banks. And of course it will also give you as to what is going to be your interest cost on the working capital. So these are the steps that you will need to do, and after this what you will do, you will do the computation of interest on term liabilities. तो आपने स्टेप नंबर प्रीवियस स्टेप में आपने क्या किया, प्रीवियस स्टेप में आपने you could calculate interest burden on working capital. But remember, as a business you do not have interest only on working capital, you also have interest on your term liabilities. So you may have taken term loan, or you may have issued debentures, or you may have issued any other debt instrument on which you will have the interest obligations. So you will also need to calculate your interest obligations on different term liabilities that you may have. Now that you have done, so what you have done, you started with the income. From the income you reduce the cost, so you arrived at the figure of EBITDA. From the EBITDA you are deducted the figure of depreciation and the amortization, and you came to the figure of EBIT. From the EBIT आपने क्या किया, उसमें से इंटरेस्ट कॉस्ट माइनस कर दी, इंटरेस्ट कॉस्ट आपने माइनस कर दी ईबीआईटी में से, तो आपके हाथ में बचा अर्निंग बिफोर टैक्स ईबीटी. अब ईबीटी में से आपको क्या करना पड़ेगा, ईबीटी में से आपको माइनस करना पड़ेगा द अमाउंट ऑफ टैक्स दैट यू वुड पे over the life of the project, right? So you will deduct, you would compute the tax liability and deduct that tax liability from the figure of EBT, earning before tax, and what you will get in your hand is your net profit. And remember, this net profit is your EAT, earning after tax. अब याद रखिए, now what you will need to do, now you will need to calculate the cash available. And remember, the cash available that you will calculate can be of two types. One is FFCF, free cash, FCFF, free cash flow for the firm, or free cash flow for equity. So because the valuation that you will do, and please pay attention because this is very important, the valuation that you will do going forward can be valuation of the entire business, or it can be the valuation of the equity. So depending on what is that you are trying to value, are you trying to value the firm or you're trying to value the equity, you will need to find out, you will need to calculate your cash flow. So free cash flow for firm or free cash flow for equity. So this is the two things that you will need to find out. And then of course, so once you find out this cash flow, then you will have to also determine your cost of capital. And why you will need to determine the cost of capital? Because ultimately, please remember, you will need to convert this cash flow, whether it is FCFF, a free cash flow for the firm, or FCFE, free cash flow for equity. Doesn't really matter. In both the cases, you will need to discount them. And why you need to discount them? And here I would like all of you to please pay attention. You will need to discount them because you need to find out their present value. And why you need to find out the present value? You need to find out the present value because total of the present value for all the years is your value of the business. Of course, you will need to use two-stage discounting model, which I am sure is going to be part of your discussion subsequently. But at this point, just remember two cash flows: free cash flow for the firm and free cash flow for the equity, and that is what you should remember. So friends, this is these are the steps that you have to follow for the purpose of financial forecasting. Only two precautions that I would like to mention here, rather one precaution, and that is when you are making financial projections, make sure that your financial projections are as realistic as possible. There should not be any amount of floweriness in your projection, because if you over optimize your projections, your value may come high, but tomorrow it might put you in trouble, and that is what you should remember. And why you should remember? Because as a professional valuation, our responsibility is to arrive at the fair value, and we can arrive at the fair value only when the financial projections that we have prepared ourselves are as accurate as possible, or the financial projections that have been given to us by the client are validated by us and they are as accurate as possible. So these are the different steps that you would take for the purpose of financial forecasting. Now, in case of capex, in case of a new project, of course there are certain new steps that you would need to take, and I just thought that I would talk about them as well. तो अगर आप एक कैपेक्स का इवेल्युएशन कर रहे हो तो आपको कुछ और एक्स्ट्रा चीजें एग्जामिन करनी पड़ेंगी, जैसे कि फाइनेंशियल इवेल्युएशन ऑफ कैपेक्स बेस्ड ऑन दी। तो सबसे पहले आप क्या करोगे, जो आपने प्रोजेक्टेड कैश फ्लो बनाए हैं, ऑन दैट बेसिस यू विल डू द वैल्यूएशन ऑफ दैट प्रोजेक्ट, देन मेकिंग एडजस्टमेंट्स इफ द प्रोजेक्ट इज नॉट फाउंड वायबल। तो आपने पूरा प्रोजेक्शंस तैयार किए, एंड व्हेन यू हैव डन द प्रोजेक्शंस and when you do the evaluation, you realize that this project is not giving you the required IRR, or when you discount the cash flow of this project based on your reference rate, you are getting NPV which is negative. So obviously if the project is not giving you your required IRR, or if the NPV based on your cost of capital is coming negative, that means this project cannot be done. Or if this project has to be done, then this project will have to be modified so as to bring the cost of the project down, so as to improve the profitability, so that the cash flow from the project could become positive enough so as to generate a positive IRR. So वो सारे आपको एडजस्टमेंट करने पड़ेंगे, और वो एडजस्टमेंट करके फिर आप नए तरीके से फाइनेंशियल प्रोजेक्शंस तैयार करेंगे, नए तरीके से फाइनेंशियल प्रोजेक्शन तैयार करके फिर आप वापस उसको इवेल्युएट करेंगे। और इस बार इवेल्युएट करने के बाद अगर आपको लगता है that the project is giving you your required rate of return, then of course you will accept that project. So friends, this is how you will do the financial projections. While talking, it looks very brief, but when you will work on it, it will take a very long time. But the steps that you will need to follow are going to be same as we have just discussed. Now theoretically, I would also like to share with you some of the forecasting techniques which are available. One is Delphi Technique. So in case of Delphi Technique, what you do, you have a group of experts, and what you do, you send questionnaires to these group of experts asking their views regarding the forecasting, demand forecasting. So these people will give you some idea, you will look at them, send it back to them, they will again look at them, and then collectively they will come to some conclusion, and that is supposed to be forecasted demand for your product or project. Then you got time series analysis. So what you do, past data are projected to find out the projected demand for the products that we are talking about. The third is causal model. So causal model का मतलब क्या है? Causal model का मतलब ये है, you try and see the demand in terms of cause and effect relationship. So let's say for example, the population of this country is increasing. Let's say I'm just saying only for an example, the population of this country is increasing by 1%. Assuming that 10% of this 1% people will be using toothbrush to brush their teeth, then this is how you will project as to how much is going to be the incremental demand for the use of toothbrush, and that is known as your causal model. And then scenario writing. So scenario writing is something similar as Delphi method. So what you do, you create different situations. So many you pick up the demographic data, and this is how the demographic data are used, that India's population comprises of 65% youth, 35% elderly people. So 65% youth, what are their requirements, based on their requirements, you create a scenario and try and come to a conclusion as to what can be the demand of a product which is used by the youth. So these are the four methods, theoretical methods for doing the forecasting for the demand of different products. So friends, this is all about the forecasting. Of course, in case if you have any question, we can take the question, else we can move to the last topic, that is cost of capital, which is very important, very critical, very crucial, and very crucial because unless and until your understanding about cost of capital is very strong, you will feel handicapped in handling this particular exam, and therefore I would spend little time with you and try and make it interactive session while dealing on the cost of capital. So if you have any question, please speak up.